The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Hello and welcome to The Trade. Well, before we get into the charts, let's take a look at the news that traders are watching. The Trump administration wants countries to provide their best offer on trade negotiations by Wednesday as officials seek to accelerate talks with partners ahead of a self-imposed deadline in just 5 weeks' time. Russia has told Ukraine at peace talks on Monday that it would only agree to end the war if Kiev gives up big new chunks of territory and accepts limits on the size of its army. That's according to a memorandum reported by Russian media. And US President Donald Trump's signature tax break on tips promises relatively few upsides for low-income Americans who face a net loss of income under his massive tax and spending bill in Congress, analysts say. And Saudi Arabia and Russia had to reach a difficult compromise on OPEC Plus policies as Riyadh pushed to accelerate oil output increases while Moscow argued for a pause for OPEC Plus sources with knowledge of those talks have said. Well, let's now turn to the charts. Hebe Chen joining us from Vantage Markets. Hebe, welcome back. Good to catch up with you again. So we're going to begin by looking at currencies. A lot of movement there at the moment, particularly that pressure continuing on the US dollar, but you're going to focus on what we're seeing with the Aussie yen.
Sorry for the jumping off. I'm glad to be back. Yes, I think this is a pair that caught my attention because I can see that it's now approaching a critical level, especially we're having a quite major data point coming through, which is the Australian Q1 GDP figure. And then turning back into let's look at chart. The chart is actually the weekly chart for the Aussie dollar compared to the JPY. As you can see that this pair remains under pressure, with the broader chance now it seems to bias to the downside. And the price action, as you can see, that has respected a descending trend line, which are putting up here since the December 2024 high. And now we're seeing that it seems to try to break above the 20 weeks SMA, but failed quite multiple times. Now we're seeing the dynamic resistance near roughly about 93 to 94.2 area, and this also coincides with the multiple horizontal resistance, which are also put up here, that build from the past the consolidation zones. And in terms of momentum, you can see the momentum indicators, the KTJ showing signs of a fresh bearish close after nearing the overbought area. And the pair now remains sort of trapped below the two major key SMA 20 and 50 weeks. SMA now, I say that the critical level is now I'm looking for the 200 weeks simple moving average. I think this is a level that will be face a fresh challenge this week, especially by tomorrow that we're going to have the Australia's Q1 GDP figure, which if turned out to be a softer print, may putting more pressure from the Aussie dollar. So over the near term, I'm looking for a support near 12 to 89, and a clean break below the 86 could accelerate the downside momentum, unlocking the wider 85 to 82 area. If that's the case in the near term, I think that will be the lowest level for the pair in 3 years.
All right, that's a key chart to look at as far as currencies in that pair with the Aussie yen. Hebe, let's now move to equities and a focus on Aria. What's caught your attention with this stock?
Well, Regroup is actually one of my long-time favorite, and but unfortunately seems to be a stock that faced quite multiple headwinds this year compared to its competitors. Starting from February, its CEO resigned, and then it's April's volatilities, and last week is the price action that triggered a CCC's investigation. So I think for the near term wise, I do see more that the downward pressures for the company, for the stock, but I think that for a long-term investors, they could present a potential buying opportunities. So let's look in the technical. The stock has pulled back, as you can see from the daily chart, about 9% to 10% from its 52-week high level at 276, and it's now testing the key support around 231. which aligns with its 200-day simple moving average. The KDJ and RSI both now point lower, reflecting the fading momentum from the upside from the April and moving more towards a bearish bias. A break below the 231, which I think will trigger a deeper retracement towards the 200 to 220 range, especially if the broader market volatility persists. Well, despite of the near-term headwinds, as I mentioned, I think that it's unlikely to change the quite exceptional fundamental health for the business as well as the market leadership position. So I think the long-term investors, we could potentially view the current weakness as a potential accumulation zone, particularly if the price stabilizes above key support and the sentiment improves post the management transition.
That is the view on Aria. And finally, Hebe, let's move to an ETF. This one is the crypto ETF. It is a CRYP, and it's what essentially exposure to the crypto economy, if you like. I see the biggest holdings there being MicroStrategy, Galaxy, Coinbase. What are you seeing?
Yes, you're exactly right. So the full name for this one is Betashare Crypto Innovators. I think this is an interesting ETF that it offers the double exposure for the Australian investors. One is that you can get exposure to the US listing leading crypto-focused companies, as you mentioned, like Coinbase, MicroStrategy, and also it offers you the exposure to participate in crypto upsides. I'm putting up the Bitcoin's line, which is a black line here as a comparison. As you can see, there's a quite high correlation for the ETF as well as the Bitcoin prices. And technically, as you can see from the daily chart here, the ETF has pulled back on its recent highs, but sort of remains above its 50 days simple moving average, holding the key support around $8.10. Momentum indicators, my favorite, the KDJ, such as the short-term correction may be nearing its end. As you can see, it's pointing pretty low now, especially as we know if the Bitcoin price can stabilize near the 105K. And as you can see from the correction in between the chart, I think the ETF often been lagged a little bit behind the Bitcoin's price, which means that if the bullish sentiment returns for the Bitcoin, there will be more potential for upside. For the midterm view, I would looking at a break above 699 resistance that could open the door towards the 876, which is the recent peak, also represent about 20% of upside potential for the ETF. For the downside support, I am watching the $5.60, 60 cents, and $6 zone, which aligns with two key supports from 2024.
Hebe, great to get us through those charts. Thanks so much for joining us on Vantage Markets.
Thank you.
And that is the trade.
The trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.